Hello there. Welcome to Trading Day. I'm Andrew Bell. Let's get to the big stories we're bringing you from our newsroom. Shares in Eldorado Gold and Foran Mining under pressure right now. Eldorado is issuing stock to buy Foran in a deal valued at about $3.8 billion. Creating a gold and copper producer. A TD says the transaction may raise concerns among investors because Eldorado is adding another startup project and also integrating a copper-focused asset. The deal brings together development projects in Greece and Saskatchewan. The combined entity will remain headquartered in BC under the Eldorado Gold name. 5N Plus stock soaring today to hit a record high. The semiconductor and materials producer says it plans to expand solar cell production capacity by 25% this year. This comes after the company got an $18 million investment from the Pentagon to expand its germanium refining capacity in Utah. Shares in Disney under pressure. The media and entertainment colossus beat profit and revenue estimates in its latest quarter, but the forecast disappointed investors. Disney says it expects operating income in its entertainment unit to be flat versus last year, and it expects modest growth in its parks and cruises segment. That tepid outlook is due to increased costs, but also a shortfall in international visitors to the U.S. The TSX holding in after that nasty sell-off on Friday, when it lost more than 1,000 points. And let's check out how the U.S. markets are doing. Futures were down pre-market. It looked like we could get a fourth losing day for the S&P 500, but that benchmark pointing up about 1% right now. And let's have a look at some trending trades right now. We'll check out Eldorado Gold and Foran Mining once again. Both stocks down. We are hoping to hear from the CEO of Eldorado Gold on commodities tomorrow. That show starting at 3 p.m. Eastern Time. You do often get stocks down when the company plans to issue a bunch of shares to buy another. And also, it could be some investors in Eldorado are wary of the copper weighting of Foran Mining. MDA Space, let's have a look at that stock. It is, of course, riding a wave of satellite and space-based investment by both Canada and the U.S., slipping about 2%. Of course, they, like so many other tech companies, are on the hunt for top talent. Bloomberg says they're courting global engineers in this defense-driven space boom. So the stock losing a bit of altitude right now. Let's have another look at 5N Plus. That stock hitting a record high today, expanding solar cell production through its Azure Space solar power unit. It does expect that capacity to gradually come online. And as I mentioned earlier, it just got an $18 million investment from the U.S. military to extend its germanium refining in Utah. We're watching GDI Integrated Facility, GDI. That company is the subject of a take-private bid by Birch Hill Partners and Claude Bigras, who's the CEO of the company. However, an investment manager called Medici says it plans to vote against that deal, which is priced at $36.60 a share. Medici says it has about 15% of the stock of the outstanding subordinate voting shares. It says the offer is too low and says there wasn't a proper auction held for the company. Right, let's have a look at the broad market now. We continue to bring you earnings coverage. Our guest says investors might need to become more cautious on the market in the near term. We're joined by Denis Taillefer, Senior Portfolio Manager at Caldwell Investment Management. Denis, thanks very much indeed. You are a little wary of valuations right now.
Well, yeah, the market's done very, very well, right? If you look at the market off of its April lows, it's up about 40%. Valuations are a little stretched here. So we've had a really good run. This is on the back of, we're in the fourth year of a bull market, so 3 years of really good returns. So yeah, we do think, things are maybe a little ahead of themselves. We still have a positive view on the market for the year, but especially the way the year started, when you look at the precious metals, they've had significant runs since the beginning of the year. They were in really overbought territory. We've seen a pretty significant pullback, but year to date, gold is still up 8%, I think, and silver's still up close to 10%. So we just think things were getting a little too maybe a little too frothy in the near term. But overall, for the year, we still have a fairly constructive view on the markets. Just a little more cautious here in the near term. We're seeing more volatility, and some of the parts of the markets are getting a little frothy here.
What would give us a reason for continuing to buy stocks right now, though, Denny?
So it's a lot of the same arguments we had in 2025. The CapEx spend environment, especially in the U.S., but globally, you're seeing a lot more CapEx, especially around that AI story. So that is we still think a fairly strong driver. We still think we'll see some benefits from deregulation in the North American market. We think we have better tax policy in the U.S. We're hoping to see some of that in Canada as well. So those are all kind of tailwinds that should help the overall markets. The valuations are a little stretched. We think interest rates might be a little more balanced here, maybe a little more risk to the upside, given the new Federal Reserve chairman announcement. Warsh has always been much more hawkish, so that could be a little bit of a headwind. So we think multiple expansion might be a little more challenged going into this year, but we still see some fairly good tailwinds for growth in earnings, given the rest of the dynamics that are kind of fairly positive for the markets.
The big thing with war seems to be in part just reducing the enormous amounts of assets on the Fed balance sheet that were put there to stimulate the economy.
That has been his position. He was never really a big fan of the QE deployment, especially not QE2 and QE3. So if you were to follow through with that, obviously that would have an impact on your longer rates. Most likely, we'd probably see higher rates. And again, that would be somewhat of a headwind for multiple expansion, right? So we'll see how things play out. Still very early, but over the next few months, I think we'll get a better indication where he stands today on the balance sheet, the Federal Reserve's balance sheet. And then I think from there, the market will start pricing in kind of what they expect to see on a go-forward basis.
You have a couple of stocks that you favor right now, CAE, and obviously with the world spending more on military aircraft, and they look likely to get more business for training simulators to train the pilots.
They do. On the defense side, you're seeing significant amounts of growth in that defense spending globally. And what we like about CAE is as you have different platforms that are kind of competing to win those contracts, CAE doesn't really, they're agnostic to the platform. So it doesn't really matter what types of planes that different countries will be deploying. They can train just about any platform there is. So we just like the fact that there's going to be an increased amount of spending globally, and CAE is very well positioned to basically win more of that share. We also like their defense business here, just that the last 7 or 8 years, it's been growing, but basically the profitability has been under pressure. But they're finally seem to be getting through that. We've seen that in the last few quarters. The margins have been improving. They're basically moving into a higher margin type backlog right now, and that should help sustain those better margins. So between the increase in demand, lots of money flowing on the demand side, and the improving margins, we really like the defense part of their business here.
You have another idea for us, Hammond Power Solutions. And we know the world is investing heavily in electrification, partly for these data centers.
That is the big driver, but there are other tailwinds as well that are very beneficial to the business. But the AI centers really is the dominant factor right now. So Hammond Power does one of the main products are these dry transformers. So as you have electricity kind of flowing through these high voltage lines, it needs to be essentially stepped down as you kind of connect into, whatever, an AI data center or hospital or manufacturing plant. And so there's significant demand there. So this is basically one of those picks and shovels type companies within this overall CapEx spend on these AI data centers. We think the transformer side of the business is one where there's a possible pinch point. So companies are fairly desperate to try and lock in that supply. And so that really gives the company very good pricing power. They've been impacted by some of the tariffs, some of the commodity prices increases, but they've had no problems pushing these costs through. And that's just because demand is so strong and there's a real strong requirement to kind of lock in the supply of these transformers. So we really like the way they're positioned here. They've increased their manufacturing capacity in Mexico. So for the next couple of years, as the revenues flow through this new capacity, we should see margins improve as well. And then we think they're in a cycle here where the next few years they'll have to keep investing in more capacity because the demand is that strong.
And then finally, Extendicare just closed a big home healthcare acquisition, and home healthcare a huge part of their business now.
It's becoming a bigger part of their business, and we really like that part of the business. It's a capital light type business, so we really like that. The funding behind home healthcare, you can see the government's really starting to apply more funding there. Ontario government increased their funding 2 years ago by $2 billion over 3 years. They did the same thing in 2025, except they increased it by another $1 billion for another 3 years. And one of the big reasons why they're pushing for that, there is a significant lack of supply when it comes to beds and home and long-term care facilities. Ontario alone is short about 48,000 beds today. They're going to need another 200,000 beds over the next few years. So this is kind of a relief valve, right? If you invest in home healthcare, it really helps it's a quicker dollar to have an impact. The cost of home healthcare is lower than a long-term care facility. So home healthcare will cost you about $100 to $200 a day, whereas a long-term care facility is $300. And as well, as you invest more in home health care, there's a lot of older people that are in hospitals right now just for kind of regular care for chronic type issues. As you give them that ability to be at home, to have that taken care of, you kind of relieve that pressure in the hospital. So it's a really good investment overall for the overall healthcare system. And Extendicare is kind of consolidating that market. So that was a very good acquisition. They've expanded their geographic market. It's just a very good acquisition for them.
Denis, thank you very much indeed. Denis Taillefer of Coldwell Investment Management. Coming up, gold's been on a wild ride, plunging Friday. We're going to hear from a longtime bullion watcher who says despite this sell-off, there is a real chance that gold grinds higher during the rest of the year. We'll be back. Gold rose and then crashed last week. It blasted through $5,500 US per ounce for the first time and then slumped on Friday. Our guest says, dropping below 5,000 on the way down may not be as big of a deal as it was going up through that level. However, all of this happened in a single week, and that short, compressed time frame is important. We're joined by Christopher Looney, natural gas and gold strategist at RBC Capital Markets. Christopher, thanks very much indeed for joining us. Really appreciate it.
Yeah, thank you for having me back.
What do you think? I mean, it's multiple reasons, of course, could have been and were at play. But why do you think gold really crashed on Friday?
Part of it is just the momentum of gold's rally. Anything that is moving that quickly, that much higher, is prone to some sort of retrenchment. And we saw that correction unfold in gold. There was a trigger, obviously, the announcement of Warsh as the nominee for Fed chair, and sort of the consequence that we saw play out in the dollar, where a lot of the dollar weakness we saw reverse, particularly in a short amount of time. I think a lot of the sentiment that had been driving gold were linked both to uncertainty and the dollar weakness. And so seeing that change sort of suddenly really unleashed a lot of this move lower. And again, I think this is probably a healthy correction for the gold market and could give it a more room for a more measured pace from here.
Your take is that despite this sell-off, and I know it's such a fast-moving thing, but a couple of days ago, your take was...
it was a busy week.
Yeah, that gold, there's a real chance it grinds higher from here, despite the selling.
Yeah, so if going through our research over the course of last week, you know, earlier in the week we did not change our view. Our longstanding view has that gold should spend most of its time in the $4,500 to $5,000 per ounce range in 2026, and probably finish on the higher end. We had 5203 as our Q4 average. That view didn't change, but what we had been citing earlier in the week was that if we saw, and there was certainly potential, and we still can't write off it now, if we saw 2025 type price gains, that could lead to prices around 7,100. And so while that is by no means our base case, it remains a possibility that we cannot write off in the gold market, because what underpins the move and what has underpinned the move in 2025 and now into 2026 largely remains intact. There's a lot of uncertainty in the market. Investors are looking for a hedge to a lot of this uncertainty. You see central banks piling in, and you generally have a gold positive macro backdrop. And none of those things are really disrupted coming into 2026. And even over the course of the last week, despite the volatility, a lot of these themes remain in place. So that view that we had at the start of the year remains intact. And I think wherever we settle as this correction continues to unfold, it is certainly possibly an entry point, as gold will probably grind higher. And again, we still think that gold will remain mostly in that $4,500 to $5,000 per ounce range, and can potentially finish higher than that using our Q4 high as a benchmark over 5,200. So there's room for gold to run, I think, and there's room for this sort of grind to resume, again, because those major factors that drove gold are still intact.
Right. It sounds like you're not calling, though, in the near term for 5,500 yet again.
No. I do think, this is potentially the starting point, again, where we settle from this correction, leaves room for a grind higher. What we learned over the course of 2025 and obviously in 2026 to date is that there can be numerous sources of uncertainty. And so we can't write off a rally. We can't write off a move higher on the back of that uncertainty. But we're not expecting a move last week, like this week, or in future weeks like we saw last week.
What about silver? Silver, of course, has outpaced gold big time over the past year. Is it? I mean, it's a much smaller market, potentially much more volatile. And it's been sliding. What's your feeling on silver?
So you've seen what happened in gold also happen across metals markets. Silver was by no means immune. It benefits from a different type of story in addition to the uncertainty and the sort of what I view as the gold positive macro backdrop as well, which saw it hit its own highs and then move lower. But like gold, and particularly in how we're thinking about gold in this world, I think uncertainty is certainly something that factors into flows across precious metals broadly. It's something that they both share. And looking towards gold and across the broader metals complex, I think there are reasons to view this correction as probably a healthy move broadly.
Yeah. And I see people, silver, wow, I didn't realize it was down that much, 26% on Friday. Yeah. And apparently some of it was the old speculative money from China. Christopher, thank you very much. Really appreciate it.
Thank you for having me.
Christopher Looney, natural gas and gold strategist at RBC Capital Markets. Okay, so we've seen a bit of weakness in oil right now. Is there real progress being made towards US-Iran peace? Is armed conflict inevitable? We will talk to an oil historian after this. Seen some selling in oil today amid hopes that tensions between the US and Iran may be easing. But are we headed towards more violence? Could there be attacks by the US on Iran? Let's get more from Gregory Brew, a senior analyst, energy, climate and resources at Eurasia Group, also an author on Iran. Gregory, thanks for joining us. I think you've done 2 books touching on Iran.
I have, yes. Thanks so much for having me on.
Thanks very much. So your take is that Iran, it's on a currently unsustainable course with steady deterioration of the economy and shocking violence that members of the Iranian elite say, well, we can't continue on this course.
Absolutely. Iran faces probably its most acute crisis since the revolution, probably its most acute crisis in decades. Its economy is very poor. The recent protests were some of the largest in history. The regime used brutal force to put down those protests. So for now, there is a sense of uneasy calm with the leadership mostly rallying around the supreme leader, Ali Khamenei. But this is not a sustainable course. The economy continues to deteriorate without addressing the core concerns of the people, including the economy, but also the legitimacy of the regime. The Islamic Republic faces more protests, more instability, on top of the likely threat of U.S. military strikes in the near future.
So Khamenei, you say, he's 86 years old, and he has almost set up a separate power structure incorporating the Revolutionary Guards, the elite military people, who are active in all kinds of commercial businesses. So he's set that up as his personal power structure, separate from the regular government?
Yes, in many ways, Iran's government is something of a hybrid government. There is the civilian leadership. There's the president, Masoud Pezeshkian, who was elected in 2024. There's a civilian bureaucracy, and there's a national army. And then on top of that, there is the supreme leader, Ali Khamenei, who is the key decision maker. He's the commander-in-chief of the military. And next to the army is the Islamic Revolutionary Guard, or IRGC, which is kind of a shadow army or a parallel army. They have most of the advanced weapons. They control the ballistic missiles. They oversee the nuclear program. And as you mentioned, they also have vast holdings within Iran's economy. And they form the real sort of obstacle to regime change. They're committed to the Islamic Republic. They're largely committed to Khamenei, keeping the system the way that it is. And they would crack down, as they did several weeks ago, on any attempt to change the regime from within.
So what is likely to happen? You have written that, it's not unknown that repressive regimes do change. So there could be change from within Iran?
Yeah, so if you look at there is an ongoing discourse inside Iran. Iran is not an entirely closed country. And there are members of the elite, including those with links to the IRGC, who have been very vocal about making some changes, right? Not sweeping the whole regime away and replacing it with something new, but adjusting the economic policies, adjusting some of the social policies, and perhaps even pursuing a deal with the United States. The problem with making any kinds of changes that go beyond what the regime has been willing to do is Khamenei. He is stubborn, he's a hardliner, he has final say on key decisions. So imagining the regime making any big changes. I mean, just today, there's some news of new talks between Iran and the United States later this week. It's still hard for me to see Iran from backing down from any of its long-standing red lines over enrichment or developing missiles, so long as Khamenei is still supreme leader.
So what does this all mean for the oil industry? Obviously, from a business point of view, that's important. The U.S. has not mounted a tax, for example, that disrupted oil output.
Correct. I mean, in the past, we've seen attacks between Iran and Israel, right? There were a few in 2024. And then, of course, there was the 12-day war last year between Iran and Israel that the United States came in at the very end to bomb Iran's main nuclear facilities before President Trump quickly pushed both parties towards a ceasefire, in part because he was conscious that the war would continue to put upward pressure on oil prices. Right now, prices have they fallen in the last day based on this news that perhaps strikes aren't imminent? But the likelihood of U.S. strikes, the possibility of disruption is continuing to put upward pressure on prices. And that may be playing into the U.S. position here. That may be part of the reason why Trump is willing to at least entertain the idea of talks with Iran. But for me, I don't think that's going to be an obstacle to strikes. I think the U.S. is still considering military action. When it comes, it won't be focused on oil. It will be focused on Iran's military. It will be focused on its missiles, potentially its nuclear program. I don't think the U.S. is interested in taking out Iran's export facilities or anything that would put a lot of upward pressure on prices in the short term.
Would the Americans go the whole hog and try to go for that regime change? I mean, that would be a tall order and catastrophic, potentially, in terms of loss of life.
It would be. It would require a very large military operation, something beyond what President Trump has been willing to do in the past. I think the president likes quick, decisive wins rather than prolonged campaigns. And even though the regime is weak, even though it faces a significant crisis, it's still holding on to power, and it still has the means to hold on to power, even under U.S. bombardment. So bringing about regime change would be very difficult. There's really no organized internal opposition. The U.S. could use military force to push the regime towards collapse, but that would create all kinds of negative knock-on effects. It would create instability spilling over the borders into places like Turkey, Iraq, or into the Gulf. It could disrupt Iran's oil production. I think what the U.S. will try to do here, if it does opt for military action, is something more specific, something more precise, that again is framed around Iran's military rather than its oil exports or the survival of the regime overall.
Greg, you have been following Iran for years. We've very little time yet, but a neighbor of mine with an Iranian background claimed to me that a lot of people in the Iranian elite actually send their kids to university in the U.S. Is that actually true?
It is true. They send the senior members of Iran's elite, they do. They send their children to schools in the U.S., in Canada, in Europe. They have access to wealth that the rest of Iran, the rest of the Iranian people don't really see. Many of them have ways of getting around U.S. sanctions. So it speaks to how this regime has been able to survive years of economic pressure. And the fact that it has an elite that remains at the top, that still has access to these things, it speaks to the degree of inequality and corruption that the Islamic Republic is based on. It is an aspect of the system.
Gregory, thank you very much indeed. Gregory Brew, Senior Analyst, Energy, Climate and Resources at Eurasia. Really appreciate it. Up next, Canadian semiconductor and materials firm 5N Plus is ramping up production, in this case of solar cells, amid demand from space, AI and defense clients. We'll have more after the break. Dye & Durham, the vendor of legal software, says it posted a loss of $88 million in fiscal 2025. It also reported revenue of just over $100 million in the first quarter of this year. This financial filing is expected to mean the lifting of a trade order, a cease trade order that was issued on the stock by the Ontario Securities Commission in December. Dye does expect its shares to resume trading on the TSX. Dye has been focusing on restoring operational and financial stability. It says it will outline its full strategy at a shareholder meeting next month. U.S. President Donald Trump is getting ready to launch a strategic critical mineral stockpile, according to Bloomberg. This $12 million stockpile is aimed at protecting manufacturers from supply shocks and cutting America's reliance on Chinese rare earths and other metals. It will include minerals such as gallium and cobalt, which are used in products such as iPhones, batteries, and jet engines. Tyson Foods reported sales and profit in its latest quarter that topped Wall Street expectations. But the meat giant's beef business posted a loss of $143 million in the quarter, and it says Tyson says it will close a beef plant in Nebraska. As a result, the company narrowed its expected operating loss in beef, but maintained its outlook for the year. And there's a look at the TSX after that brutal sell-off on Friday, our market holding its own. And let's have a look at the US markets. And they are, broadly speaking, higher today. They too were hit with selling at the end of last week. Big traders right now south of the border include Tesla slipping, Nvidia slipping, but SanDisk, the memory, and Micron, both of them surging. Pricing for memory devices speeding up in January on AI demand. We looked already at shares in Montreal-based 5N Plus. It's a materials and semiconductor technology company. It's stepping up its investment in solar cell production as its backlog rises, rising defense demand, and a new investment from the U.S. Department of Defense, or Department of War, I should say, has excited investors. Let's walk us through the company's strategy. We're joined by Amer Ezzat, Managing Director and Deputy Head of Research at Ventum Capital Markets. Thanks very much indeed for joining us, Amer.
Thanks for having me. It's good to be here.
Can you remind us, what does 5N Plus do broadly? I mean, they're in all kinds of things, but what's their core business?
Think about it as three different businesses that are all mission critical. The first business is what you were just discussing. It's space solar cells. And obviously this is booming and they're benefiting from it. The second business is solar cells as well, but terrestrial solar cells, which are also mission critical, and they're the largest supplier to First Solar in a mission critical compound called CDTE. Then the third business is bismuth, which is what you find in Pepto-Bismol. So the two first businesses are growing like gangbusters, and the third one is outsized margins and just high visibility.
Bismuth, the element, yeah, it's interesting, used in Pepto-Bismol. But I thought the solar cells were a kind of commoditized business. How do they're able to compete with the Chinese, for example?
Oh, actually, it's not commoditized at all. When you think about the supply picture out west, there's only 3 Western players that can meet the technical and reliability requirements. And 5N Plus is one of these 3 players. The 2 other players are a division of Boeing and a division of Rocket Lab. And all these 3 players are capacity constrained, hence why the announcement today to increase their production by 25%.
But these are specialty solar cells for use on a space vehicle or a satellite, for example?
Correct. The technical word for what they do is a multi-junction solar cells that are germanium based. And when you think about the different sort of constellations we send into the LEO, MEO, and GEO, they sort of are able to supply their multi-junction solar cells everywhere. The only place where they don't really compete is VLEO, which is the very low Earth orbit.
And then the refining germanium, which we keep hearing a lot about, it's a crucial material in Utah, and they're going to step that up with almost $20 million from the U.S. government?
Correct. So they announced, or the U.S. government or the Department of War, as you mentioned, announced late last week an $18 million investment to expand domestic germanium refining capacity, essentially to 5N Plus. And germanium, the way to think about it in very layman terms, is a critical material used in night vision systems, infrared cameras, missile guidance, and the solar cells that power satellites, as we were discussing. So you don't see it as a consumer, but it is essential for modern defense systems, space infrastructure, and advanced imaging. And what's driving urgency is that most global supply has historically come from China. So the U.S. is focused on securing domestic reliable sources, and that's why this funding matters. And this, too, is what's driving the stock price of 5N Plus.
And I think a worry is that the Russians, too, have a grip on some of this rare earth market, and they're obviously a risk.
Correct. And that's why 5N Plus is becoming a much more critical supplier to the U.S. And I think investors are starting to realize that, hence the stock reaction.
I mean, shares hitting a record high today. Would you be a buyer of 5N Plus now with new money?
Definitely. We've got a $30 12-month target and a buy rating. The stock has performed extremely well, but what's changed is visibility and the risk profile. And when risk comes out of the story and visibility improves, valuation frameworks adjust. even without near-term estimate changes, recall like all of these sort of investments they're talking about will gradually happen in 2026. So they really hit your 2027 numbers. And what we tell a lot of our institutional clients, if you think you missed it, you haven't. These are multi-year structural tailwinds that are going to drive 5N plus for the next 10 years.
Wow, and they used to be a medical imaging material supplier, but they've certainly put themselves into a sweet spot now, some hot markets.
This is a very small part of the business, actually, that they don't speak about a lot, but it might drive the next leg of growth. We do not assign any value to that currently in our valuation.
Amer, thank you very much. You mean they don't talk much about the medical imaging?
Well, there's a lot of interesting other things happening in the story right now, but the medical imaging is still alive and kicking and might provide for a lot of growth in the future.
Fascinating. I just hope they don't get bought up and we lose another stock off the TSX. Sorry, we're almost out of time, but is there a risk that happens?
I agree. There is always a risk, but it seems like that is not the plan.
Thank you, Amer. Really appreciate it. Amer Azat, Managing Director and Deputy Head of Research at Ventum Capital Markets. Coming up, we are going to hear from a co-founder of the Canadian fintech Cider. They're involved in incentives and loyalty plans, and they're working with credit unions. They just raised more money. We'll be right back. Let's have a quick look at the TSX, see how it's faring. Maybe a one-week chart for the TSX, because, of course, last week it was trading in record territory. Then came the brutal sell-off on Friday with our domestic index losing about 1,000 points, thanks to control room. So you can see over 2 weeks, our chart is showing our market down about 3%. Just of interest here, these software stocks keep suffering. Maybe a 5-year chart for Constellation Software will illustrate that. New multi-year low. Descartes Systems, DSG, another name hitting its lowest in at least a year. Descartes, DSG. Or Kinaxis, KXS. That's Kellogg Xylophone sister. Thank you, control room. That one hitting a multi-year low today. And Thomson Reuters, more of a giant database company, TRI. And that one, long seen as a blue chip, as was Constellation Software. That one hitting a multi-year low today as well. So investors still skeptical that these long-standing software companies will withstand the onslaught of AI. Some stocks, okay, we can keep moving. I was going to mention Canadian Imperial Bank of Commerce hitting a record high, but let's get on to this emerging fintech sector. Cider is our focus right now. It's just raised $3 million in its latest strategic financing round, led by Saskatchewan's Connexus Venture Capital. Let's get more on Cider from the co-founder, Will Christodoulou. Thank you very much indeed for joining us, Will.
Thank you for having me. It's a pleasure to be here.
So we think of Cider as a player in loyalty points. You're working with credit unions. Tell us how you make money, please.
For sure. I think actually real quick, if it's okay, I start by actually maybe letting viewers know what credit unions are, because not a lot of people actually know what they do every day for our local communities. Credit unions are fantastic organizations that are basically local banks. They essentially, when you join a credit union, you immediately become a shareholder of that particular credit union. And by being a shareholder or an owner in what they call members, they actually give you perks, incentives such as free checking accounts, better loans and mortgages and things like that. Mm-hmm. And they operate in a specific community. The way that we work with credit unions directly is we provide them the ability to create their own loyalty programs, just like BMO has created and partnered with Air Miles, or TD has partnered with Aeroplan, because credit unions have been looking for a solution like this for quite some time. We essentially are a software licensing fee that works with the credit unions in a very predictive manner that they can kind of spin us up in a couple of weeks and use us on a daily basis.
And what, say I'm a customer of a local credit union, what kind of goodies would I be in line for here?
For sure. And so this is the thing that's really great about credit unions, because they operate much more in a different lens of what traditional big banks might do, is that they like to have a much more personalized working experience with their members. Mm-hmm. And so as a member of a credit union, one of the great benefits that you can have that's different than traditional loyalty programs are things like getting points for shopping local. When a member uses their credit card at their various different credit union, they're able to get points for going to a local coffee shop rather than a bigger box store. Another one is for incentivizing better financial behaviors, not just transaction-based things that you see, for example, like opening an account, but reaching a savings goal, or perhaps ensuring that you saved a certain amount of money to be able to better your credit score. And by getting points or cash back for those type of activities, it deepens the relationships that members have with their credit.
Some of your Mars Investment Accelerator Fund has been one of your backers. You often think of them as being focused on technology, but in this case, they're buying into fintech.
Yeah, that's right. Like one of the investors that we've been fortunate to have since the early days of the Mars IAF, they leaned into this particular thing. They've been with us since the very beginning of our journey, and seeing the opportunities that backing kind of this out of fintech business, because of the opportunity with there's over 400 credit unions in Canada alone, 5,000 in the US and then global. So they've been able to lean into supporting our business to be able to grow here in Canada, which has been a great partnership since the beginning, and growing as well with Connexus Ventures, Graphite Ventures, and Sprout Fund, all Canadian VC firms that supported us in this particular case.
So you just are working with credit unions. That's your model right now?
Yeah, as of right now, we've begun this niche of working with these great institutions. The reason is that they've been actively seeking a solution like this for years. There just hasn't been a model that's been affordable and scalable. For example, we created a tech that can work with credit unions as small as 5,000 people that bank with them, to as large as 500,000 plus. And we've been working with those type of clients for a couple of years. But as an expansion, we want to start exploring into different industries and markets, especially in the United States in the next year or so.
So you might start working with other types of companies and organizations?
Yeah, so I think one of the type of partnerships that we'd be looking at actually would be, since we currently today, the platform supports over 20 credit unions in Canada, the US, and almost 1.5 million people are on the platform right now. We would actually be able to get better partnerships with different groups like travel rewards or gas rewards groups, so that when a member is using the various different credit union points or cash, they could benefit by going to a co-op gas station or co-op grocery store. And creating those partnerships has been a major benefit to actually using the Cider platform that credit unions originally couldn't reach before.
And the local angle is interesting. I could see where people would like that, as opposed to some anonymous big box store. Yeah, you're helping out a local merchant. Thank you very much indeed for joining us.
It's my pleasure. Thank you for having me.
Will Christodoulou is co-founder of Cider. Still ahead, we'll check out the markets before we go. Another quick look at the markets before we go. After the vicious selling on Friday, the TSX has been holding its own today. One stock trading close to a record is CIBC. I saw that stock briefly hitting a 52-week high, apparently, but my screen is indicating it's still down from a high of just over $130 a few days before Christmas. Let's have a look at Manulife, because that stock moving up today, and it's trading close to a record high. Maybe not quite there. Just give me a sec. Nope, I'm showing Manulife, 52.45. At one point it hit today a new record high for that giant insurer. Let's pop up SJ, Stella Jones, not quite at a record high, but getting very close, still down from its record of just over a year ago. maker pressure-treated materials, including poles. And I suppose as we're going to be getting more services for our wretched phones, we will need more of those poles to carry the aerials. We're out of time on trading day. Thank you very much indeed for watching.